you're all excited to hear what the expert fund managers will tell us this afternoon. But just to set the stage for our discussion, let me give everybody a quick market recap, lalo na po dun sa mga hindi masyado talaga tumitingin sa nangyayari sa market on a regular basis. At the start of the year, all of us were thinking that the path to recovery is really here already. So if you recall, if we take a look at the caseload in terms of our COVID-19 infections, it was on a downtrend from August all the way to February. And at that time, if naalala po natin, there were even talks that we'll go back to MGC or will move to MGCQ rather. But instead of that happening, what we got was a massive surge in number of COVID-19 cases. And so we had to go back to lockdowns. And it's only now that we are seeing a downtrend again for new COVID-19 cases on the ground. But the damage has already been done. So if you take a look at our GDP as of first quarter, it's still in the negative. So over the past 5 quarters, nasa recession po yung ating economy. So latest print was 4.2%, all because of the lockdowns that we had to impose because of the resurgence in COVID cases. And adding to our woes was the fact that inflation pressure was also felt at the start of the year. So last year, yung inflation natin, it was just hovering around 2 to 3%, but all of a sudden by January, went up to as high as 4.7%. And this is beyond the target of the BSP of 2 to 4%. And because of this high inflation figure, we saw the market interest rates react. So you see in front of you the 10-year government bond yield. So last year it was just trading at around 3%. Then all of a sudden it followed the trend of the inflation going up to as high as 4% before settling down to 4.1%. On the stock market front, and I believe most of our COL clients are pretty much monitoring what's happening to our market. We started the year at 7,140, but because of the COVID cases that we saw, nakita natin bumagsak yung market. Medyo nagkaroon ng tinatawag natin na risk-off sentiment. So before we recovered the last few days, our market went below 6,200. And right now, thankfully, with the 3-day rally that we saw, went up back to 6,600 levels. But still, on a year-to-date basis, we're down by 6.6%. And just to contextualize that, comparing ourselves with neighboring countries or regional markets, we can see that the Philippine market is still clearly the laggard here. So let's hope that we'll be able to play catch up as we move along the balance of 2021. And just to quickly recap, when we did this kind of briefing 6 months ago, back in December, we asked the fund managers. And for those of you who were early, you saw the recap, the video recap. These were the main positive catalysts that the fund managers informed us of, and the reason why they were constructive and more or less positive heading into 2021. So according to them, if there's a reopening of economy, vaccine distribution, corporate earnings recovery, consumer confidence, or even positive foreign flows, that would be the reasons for the market to go up. Unfortunately, most of this didn't happen, but if you would recall, the fund managers also told us about the risks that are possible to happen at that time. And true enough, if you take a look at this list, most of this indeed happened. So we had the resurgence of COVID-19, unemployment is still elevated, GDP was disappointing, and so were the corporate earnings. Vaccine distribution is still slow due to supply issues. We see the net non-performing loans of banks still creeping up. And then we've had bouts of global markets volatility. So if you will recall what I said back in December, that's the beauty of having this kind of forum so that we get a glimpse of the dashboard ng mga fund managers so that even if things don't happen the way we want them to be, at least we're aware of the scenarios. And hopefully that's what we'll take away from this market briefing as well.